Hi everyone. Thanks for watching this panel around real estate finance in Southern Europe. I'm Carlos Castelló. I'm the head of loan advisory and strategic advisory at CBRE Spain, with a special focus on NPLs and monetization from real estate assets through structured financing. I have the pleasure to moderate this panel today. We count with great and brilliant panelists from different countries across EMEA. We have today Paula León, who is the head of institutional sales at Sareb. Hi, Paula.
Hello, good morning.
Do you want to make a quick intro of yourself?
Of course, I'm head of institutional sales and investor relations at Sareb, Spanish-backed bank. It was created almost 8 years ago to take care of the toxic assets of 9 different banks that needed restructuring in Spain in 2012. Before that, I've worked in real estate finance, both in London and in Madrid, mainly in international banking.
Thank you. We have today as well Gonçalo Castro, a partner from DLA in London. Hi, Gonçalo.
Hi, hello, Carlos. How are you?
Good.
Yeah, just a quick introduction. My name is Gonçalo Castro Ribeiro. I'm a partner at the finance department here in DLA Piper Lisbon. We work extensively with real estate finance, with borrowers, lenders, national and international investors. I have 15 years now of experience between 2 law firms, now with DLA Piper, and I'm very happy to be joining this call.
Thank you, Gonçalo. We have also Nunzio Laurenziello, head of debt investments at Generali Real Estate. Hi, Nunzio, how are you?
Hi, good, very good, and you?
Not bad, thank you. Can you please make a quick intro of yourself?
Yes. On my side, I am the head of debt investments within Generali Real Estate. I joined Generali 2 years ago, and I moved from the investment banking side because before joining Generali, I was director of Julian Locke and US Investment Bank, and where I work mainly on real estate financing. When I start my new adventure on the asset management side, I start from scratch to create this platform of real estate lending across Europe within Generali, and this is a very exciting project. So that's it on my side.
Thank you very much, Nunzio. And we also have Pablo.
Can you hear me now?
Now.
Okay. I've been working with the other headphones for a few months and I never had a problem, so it's a bad luck today. Okay. Now, as I was trying to say earlier, thank you very much for having me in this panel. I work at ING in Madrid. We cover Spain and Portugal in the real estate finance team, and we are focused on core markets and trying to expand our business in these 2 countries. We are part of a global franchise, and I think ING is probably well known to everybody.
Great, thank you very much to all. Well, the topic of the panel is to discuss the situation of the real estate finance business across EMEA, but specifically in Southern Europe. As you know, we are suffering a terrible crisis that began as a sanitary crisis that has turned out into economic crisis, and we don't know whether it will also have an impact on financial institutions, but it's something to see. We would like to touch base on 4 main models or topics about the market outlook in this situation, and how does this crisis impact on the borrower side and lender/investor sides, and also what are the main legal consequences or issues with this COVID crisis on real estate financing. So let's go with the first model. Please feel free to I will address questions to each of you, but please feel free to add your views. You think if you want to share something else. In terms of market outlook and the current situation, I think that this will be for Nunzio or Gonçalo. What are the main differences and implications to real estate finance between the current crisis compared to the great crisis of 2008? Maybe Nunzio, do you want to?
Okay. And first of all, the first difference, in my opinion, respect to the global financial crisis and this new crisis are the loan to value before the crisis, because respect to the situation previous the global financial crisis, before COVID, the loan to value are around 50% respect to the situation pre-financial crisis. It was around 70%. So this is the first difference between the situation before the global financial crisis and the situation before the COVID pandemic. The other point is that the lenders, when the pandemic started, immediately adjusted the loan to value and the pricing immediately. And so as of today, we have a loan to value around 50% respect to the situation before the financial crisis. So this offers a good starting point for the overall European markets to withstand the anticipated impact of any declines in capital values and further adjustment in lender terms as the COVID-19, including economic recession and anticipated recovery unfolds. So in my opinion, respect to the global financial crisis, as a lender, we are in a better situation. Of course, there are some asset classes that are more resilient than the other, and there are some other asset classes that are more impact than the others. But in terms of fundamentals, and so loan to value, especially loan to value, and so the value of the assets, we are, in my opinion, more safe respect to the situation related to the global financial crisis.
Mm-hmm. Very interesting.
Yeah,
maybe Gonçalo, do you want to add something?
Yeah, I mean it's a very interesting and a very important point, Nunzio, that you mentioned that we are in the pre-crisis situation is perhaps a bit different. Perhaps we are more prepared in terms of where we were before the crisis to deal with it now. Although, I mean, if we go to similarities and how then we compare the two crises, if we compare the terms of the impact, the almost collapse of economics, we had both, and maybe if there's a difference, this crisis is worse, or we can anticipate that it could be worse. In terms of how uncertainty plays a role now, and then, I mean, there were uncertainty in both cases, but uncertainty now is, I mean, we are all hoping for a vaccine or a solution in 2021, medically wise, but we cannot be sure about that. And so it's good to be in a better shape to start with, but if we are totally realistic in terms of impacts, we could say that the crisis could be worse. I mean, this is on one side. On the other side, there are also good lights to point out here. I think that everyone says that the crisis is global. I mean, the other one was also, but maybe it affects everyone the same way. Which, I mean, it depends. I mean, people who are in a better shape, of course, are less affected. Entities who are in a better shape, but it's more, at least the sense that there is that it affects us all, and that's a good thing. And there is also a breadth of measures that are being taken that are quicker and are implemented faster than in the previous crisis. And so, but also there are some shadows in terms of the multilateralism that we see today that can be a problem. So I think it's a very challenging environment, and I'm not saying anything that no one knows already. And I think that what we know is that based on the previous crisis, we need to do our homework. And the crisis presents challenges, but also opportunities. And from what we learned, and I think that's the major difference from what we learned in the previous crisis, we are now in a situation to implement solutions more efficiently. But yeah.
Thank you. And Paula, do you think that this situation will be a game changer for real estate financing, meaning that this will impact the appetite from the banking industry to continue lending to real estate, and this will be an opportunity for alternative financing, alternative funds to take the role of the bank. Do you think that this will change the playground?
Landscape. I actually agree with both what Nunzio and Gonçalo were saying. This crisis is very different from the one we lived 10 years ago. It was a systemic crisis, and this is a circumstantial crisis, but unfortunately we are seeing that the banking industry itself is moving much faster than it did in 2008 and 2010. And we are seeing movement of consolidation. We are seeing the big three banks in Spain announce the big employment adjustments, let's say, last week. So obviously the senior lender landscape, it's changing in Spain. And obviously that's going to affect how the real estate is financed in Spain. That's how it has been before, and that's how it's been right now, but maybe a little bit more accelerated because of the crisis. Obviously, in previous crises, this has left space for international banks to arrive in Spain. Some of them arrived once, left, then came back. Maybe we will see it this time again. There are some timid approaches so far, and there are English or British banks opening books just for Spain in London. So maybe we will see that in this crisis as well. But of course, and I agree with you, Carlos, alternative financing is something that had started, and I think the crisis has accelerated at the rate that it's going to consolidate. I think real estate development has been for quite a few years, maybe 2, 3, or 4, has already been using alternative financing with varied success, let's say. But it has been there, and I think the current situation is going to consolidate all those entities that are doing alternative financing. Actually, there were some buyers in the previous cycle that have come back to Spain right now just on the role of alternative financiers. So yes, I think, answering your question, I think we are going to see an altered real estate finance landscape, not better, not worse, just a different thing that we will all have to adjust to.
Great, thank you, Paula. Paula, given that you are one of the lenders in the real estate finance, do you see this increasing competition from alternative funds in your space?
Yes, it's starting, but as banks have our credit criteria as more strict than alternative lenders, and with increased regulations, and our capital adequacy ratios are more restrictive every year, our lending capabilities are not easy to maintain. So that means that I believe there will be more space for alternative lenders, which is something, in my personal view, positive for the market. In the past, what we saw in Spain was that you have all the savings banks and some local banks not really applying the appropriate cost to the risk. Now you see that we are starting to measure that risk, and some banks are not even willing to go to some level of risk. So if you have these alternative lenders there, such as it was mentioned by Paula earlier, the development, that's really good and healthy for the economy. So we need to, all of us, find our space and try to work on our niche. For example, as ourselves, we try to take care more of our relationships and be more predictable with our international clients, and maybe some other lenders work on a case-by-case basis on each of the projects. But I think there's room for everybody.
Mm-hmm. Great. Thank you. And also, Pablo, in terms of borrowers, how do you think that borrower can deal with this real estate downturn in Spain and Portugal?
Well, it's not easy, especially as months go by. We can see that this is going to last longer than we initially thought. But what is true is that for some time it seemed that the downturn in the real estate market was just around the corner. We never knew when that was going to happen, but COVID has brought the good times to an end in a very hard way. So the thing is now a question such as how deep and how long this is going to last, and that's what we are seeing, not only ourselves by granting waivers and negotiating with clients, but also when we are in syndicates, we see that the attitude of lenders is adapting to the situation. But I can maybe mention a few things that we are seeing is that, for example, the first mover advantage in borrowers, it's good, not only with lenders. If they are creative and they come up with a plan to deal with the stress of the tenants and with the situation, sometimes we have seen that it's good. Another point would be to be fair, to share the pain, not only with tenants but also with lenders. Usually, or in most of cases, we are seeing borrowers doing this, but sometimes when they are trying just to be very, very hard on lenders, it's not good for the relationship. We acknowledge both sides of the. We acknowledge that this is a situation that is not caused by the bad management of a deal so we understand that we need to help as lenders. So whenever there is a borrower being open and transparent and really putting a plan, we are on board with that. And lastly, I would say that it's very important, the access to capital. No, it's true that real estate is not like other industries that are burning cash just to stay alive, but still it's important to have a plan and access to both equity and debt. We have seen the eco lines, but there are other instruments that are very, very important to have a plan, because as I said initially, this is going to take longer than we anticipated.
Mm-hmm. Great, thank you. And in terms of the commercial lease obligations, Gonçalo, do you see any impact from this crisis because of the COVID Do you see any impact in terms of commercial lease obligations in the contracts between borrowers and tenants?
What we see is usually advising lenders or borrowers, and then that are landlords. We see the tenants using the provisions not only of the contract but also that the laws that have been implemented as a reaction to COVID that they do provide them, and they are using it. And there's even specific cases where there has been push for political measures from tenants that have had consequences. And I mean, the whole breadth of situations, it can go from the normal moratorium that the law has established to the ability to avoid the termination or expiration of contracts that the law also allows, and also more general solutions, for instance, in terms where you have a significant decrease of the use of the property. The law, general law, already allows borrowers to discuss and to demand a revision downwards, of course, of the rent. And we are seeing that, although it's not the primary solution. Primary solution, and I think it's normal, people know that there are new laws and try to implement them. And also within the agreements, they try to and in that we see more a negotiation perspective, where they say, well, this is tough times. We as we are saying some minutes ago, I mean, and the underlying situation, it's still there. So fundamentals are still there. If this keeps going for much longer, it will change. But and so tenants say, we want to keep doing business, keep being your partners, and so let's try to renegotiate some aspects so we can stay alive. And we see that from lenders' side, there is this understanding that we are all in the same boat, so to speak, and there is a very collaborative approach. And then there are also we see that of course the public aid solutions, the credit lines, and there are also being discussed at European level, and it will be implemented in Portugal, probably the subordinated debt, like hybrid instruments, that will also be a solution with, I mean, also downfalls related to that. So that's what we see. We see generally on the one side the legal provisions being applied, and a negotiating approach with the collaboration of lenders.
Thank you, Pablo. Nunzio, do you have anything that you would like to say about this?
Yeah, on my side, obviously, the impact on the obligations are obviously different in any single country. So we have, in Generali, a pan-European strategy. So we are seeing the differences in terms of rules in the different countries, like Italy, Spain, France, respect to other countries like UK and Germany, for example. Obviously, in UK, the enforcements of the guarantee are easier respect to countries like Italy and Spain, where you need obviously the court. But as of today, in my opinion, the position of the lenders is to understand the needs of the borrower and trying to avoid, mainly on the senior side, to force the guarantee. So, in my opinion, there is a fragmented markets in any single countries respect to the legal application, and we have to liaise with the different rules in the different countries.
Thank you.
Yeah, Carlos, I don't know if anyone, I mean, just adding one point and an idea that raised due to what Nunzio was saying, that what we are seeing is a very important aspect of this idea that different jurisdictions apply different criteria. We have seen that countries sometimes implement solutions. I'm not going to say specific cases, but there is, I'm thinking of a situation in Portugal that has a specific case that has implemented a law that allows for some tenants to basically forgive some types of rent being paid. And that really we see that causes some distress or some worries in investors from outside the country. I think that Southern Europe and Portugal in particular has done a great job in the last years to implement best state-of-the-art solutions that and also that go along with what is done internationally. But what we see is that if there is a specific case where we come up with a solution that is totally out of what is practiced in the market elsewhere, that really is not helpful, and that's what we also see is that there is this need to keep being in line with best market practices everywhere.
I agree with Gonçalo, and we have had a recent example a few days ago in Spain as well on that. No, I believe that these kind of moratoriums, in my opinion, are good if they are quick, if they are simple. There are sometimes makes that the tenants and landlords, who by the way are forced to reach an agreement because they are not alternative tenants these days. So it's good that they put a framework in the market to really reach solutions quickly. But if these moratoriums go too far and start to interfere in the market and the normal the normal work of working of the market, you know, in terms of rents and all of this, then it's a problem. As I completely agree with Gonçalo, makes some international investors think twice before investing in these markets.
If I can say it, I absolutely agree. There's a moment, and obviously economic measures are needed, but if they go beyond circumstantial and they start becoming systemic, it just changes the framework. It changes how Spain is perceived. It changes how everyone was thinking Spanish risk was going to work. And unfortunately, at this point, this is not helping us. Unfortunately, because the market is not adjusting itself. Let's say, obviously, everyone is very worried what that adjustment will lead to, right? And that's a very the concern is completely irrational because the adjustment is going to be brutal, probably. But at this point, not letting the market adjust itself is not helping us trying to attract international investment as well as we probably could, I think.
Thanks all. Let's move to the next topic model around lenders and investors. And Paula, well, you've been at Sareb since 2013, I think, that I had the pleasure to share that time with you. And you've been doing a great job implementing working workouts and recoveries in quite difficult situations and finding financing solutions to those situations. So you have a long track record in this space. How do you see the current market in terms of deals? I mean, what type of deals are still being financing in the market? Has there been any kind of change?
I can attest more to the kind of deals that banks are willing to finance for new acquirers more than at this point. I think there's not a lot of market for banks taking on Sareb old loans, let's say. I think if any of that comes to be a refinancing, it will be a completely new deal. So not that kind of refinancing or not that kind of financing in the market right now, but there's a lot of money willing to finance acquisitions right now, a lot. The problem or the key, as you were saying in the introduction, is what's the price? What's the price for the asset, which obviously sets the price for the financing, and that's that's pretty key, let's say, at this point. What we are seeing, and in general terms, sectors that are having a lot of attention are logistics. I think the crisis, if there's one good thing about this crisis, is it has propelled the logistics sectors 10 years ahead. I think we are seeing a lot of development that it would have taken place in the next decade, that's going to take place in the next 2-3 years, at least in Spain, and all the evolution of the e-commerce, all that, which you can consider good things of this crisis, come with a lot of interest from international players for all our logistic assets. So there's financing for that. There is interest, both alternative and senior financing for that. There is also, I think, interest in financing in residential. The build-to-rent sector, which is not new, but fairly new. I think it's something that many of the, and we have a very important senior lender right now here with us. I think it's something that the senior lenders are looking at. It's something that might be of interest in the coming years. And plain residential, actually, we are seeing deals in plain residential, not always financed by the senior lenders or the traditional lenders, but we are seeing, let's say, reasonable alternative financing that is making it possible that residential development is taking such a good rhythm, I think, in the last 2 quarters. So that's the things that I think at this point are being interested for financiers. Hotels, well, that's a sticky point, right? Because there are a lot of banks that do not want to refinance the facility that the hotel had in place, but they are willing to finance the acquisition that will come at a shorter price from a different investor. So that's well, I think that's a difficult sector at this point. It's difficult to gauge where the risks are and when the risks will stop. I think that's a difficult sector, but I think it's a sector that has a lot of interest as well. Offices, and we don't have that many, to be fair. Probably Pablo knows much more about this, but we are not seeing a lot of movement right now there. And I think that would basically it. If I had to set on two sectors right now in Spain, logistics and residential, probably.
Mm-hmm. Thank you. And Nunzio, Pablo, have you swifted your investment strategy in terms of deals and in terms of assets nature because of the crisis, or?
Yes, of course. On our side, obviously, we are more focused on logistic and residential as all the lenders as of today, because there are more resilient asset classes, as Paula already anticipated. In terms of other asset classes, obviously, we are continuing to analyze hotel, office, and retail with an opportunistic approach, because obviously there are some opportunities, but obviously we have to be very cautious about the value. And Paula already explained this point, because mainly in the hotel and retail sector, we have to understand which is the future value of the assets.
Thank you. Paula?
Yeah, no, I completely agree. Actually, to add a bit, we are seeing fierce competition on logistics and residential, because at the end of the day, we all the lenders have still a lot of capital to deploy, and there are not many deals on the market, and there are not also many deals that fit into our lending criteria. So logistics, we've been very active in Spain for many years now, but we are seeing that now everybody's like crazy going for logistics. And in terms of maybe offices and shopping centers, what is true is, as Nunzio said, is that we are maybe on a wait and see situation, waiting to see how it's going to impact the demand on offices and the impact of e-commerce on shopping centers, because that's going to adjust the rent and obviously the value of these asset classes. But we don't know for the moment how much it's going to affect. I'm convinced that these two asset classes are going to stay in the market. They are going to be still of interest for institutional investors and for lenders in the future, but to what level, it's the thing that it's probably will take a few months to know.
Okay, thank you. And are you surprised because of any lender getting more and more appetite in this space in the last months? Do you see any player playing hard in this market? Paula, Pablo?
Well, not that much for us. We're not that much in the competition. So obviously we see the financing when investors come with financing. So I really cannot tell. What I can tell you is we are seeing, I think I mentioned it before, old buyers or the traditional funds were buying NPL scenarios in Spain that they have come in the last months with offering financing instead. They are changing their feathers, let's say, in that sense. So we are seeing that, which is new. I don't know how many deals they've closed that much, but we are seeing that because obviously there's a lot of expectation to be an opportunity there. Whether or not the competition is in prices is that much, I really cannot attest to that. Probably Pablo is more in the market there.
Yeah, we have seen some specific cases in which the margins are same or even below pre-COVID because of some deals that are very low risk and they are probably relationship banks to these clients. And they have been most of the year without closing a deal, these lenders, and they say, I cannot lose this deal, so I need to do whatever it takes. So we have seen really some outliers in terms of very aggressive margins. It's not the rule, but yes, we have seen that.
Great, thank you. And Nunzio, how do you think that lenders can adapt to real estate finance models in these times?
Okay, this is a very tricky question. Can start from the experience, our experience in Generali, because we are also an equity investors. So from scratch, we decided to analyze any single deal with real estate financing model, financial model, like equity side. So we can rely upon the experience of the equity side. And so on any single deal, we analyze the underlying assets our equity provider. So we adopt schemes and analysis like the equity side. So we perform different scenario on the business plan. We rely upon the expertise of our equity guys on the ERV and on the exit value. And so this was very useful also into the credit analysis because we can adopt different measures and different mechanics into the analysis of the loan. So this is something that could be adopted also from traditional lenders, because if you stress your scenario and you can also understand which are the real ERV and which are the real exit value at the maturity of the loan, you can be more safer. Obviously, as of today, understand the exit value, especially in some asset classes like hotels and retails, is very, very difficult. It's really, really tough, considering that we do not have track record in terms of exit value of this kind of asset classes after the pandemic. So we really don't know what happened if there would be a vaccine, if there'll be a new therapy for this for the COVID, and if the people start again to go out to have a shopping experience different than of the past. So this is the real challenge as of today. Implement real estate financial model with a real view and with a real view of the exit value. And this is not really easy, especially for some asset classes like hotel and retail.
Well, a few big deals in hotels coming up in Spain in the next months, right? So probably that's something we're going to have data before the end of the year, because there are 3 or 4 very good quality hotels being put in the market in the last 2-3 weeks. Actually, Carlos can tell us about that. Many of them through CBRE. So I guess that's one of the big things that we need to understand, and probably we're going to have some understanding about that, let's say in the near future, I think.
Yeah, absolutely. Well, as you all know, commercial real estate is suffering a lot for obvious reasons. Shopping malls, retailers, hotels, offices. Paula, what's the bank's appetite for this type of assets in this crisis? Do you think that this is gonna change a lot in terms of getting into this segment, or just live in it and make room for these new alternative investors that we've already discussed?
I believe that as opposed to the last crisis, when I believe banks really got out of markets very quickly, I believe that now the lenders that are, at least in Spain and Portugal, are here for stay for the moment. What is true is that as the debt goes, has a lag compared to the equity in terms of appetite, so we need to see some track record before really committing to an asset class or to committing again to a market, no? And we need to really separate 2 things. First, what's going to be the temporary effect of all these crises, and secondly, what is going to be the structural changes to some habits in the society, and therefore it's going to affect the asset class and the value of assets. That for the moment we could talk for hours and we couldn't reach any conclusion, because it's still very early and very difficult to know. So I believe the appetite for commercial real estate will remain, and in some cases I believe will even expand to some new asset classes, such as senior living or student housing. Nowadays, student housing is obviously very difficult to do an underwriting on those assets, but I'm sure in Spain and Portugal this is a market that is going to be more mature, and that it will be an institutional or a more institutional even asset class in the future. So I believe our appetite in general will remain.
Great, thank you, and good to hear that. Well, I'm mindful of the time. We still have around 10 minutes. Let's move to the last topic around legal issues and new clauses included in the financing contracts. Gonçalo, maybe these are for you. What are the main legal issues that lenders and borrowers are facing in this, I don't know, whether post-COVID or in the middle of this crisis?
Yeah, now trying to be very synthetic. you're exactly on point. There are issues that are during COVID. There are issues that will have effect or will be present after COVID. And if we go to the first ones, I think that we have been dealing with them already, everything that has to do with force majeure and force majeure versus, for instance, hardship or other type of clauses and what should be applied. And people tend to say that force majeure is now a big thing, and it is a big thing, but it's not something that applies to every situation. So it should be detailed. We can go into the specifics. It's basically impossibility versus difficulty, and that's something that sometimes is a bit confused by the parties. And there are, of course, the negotiation of moratoriums or of waivers within the contract, and there's this link that is also an issue during the COVID between what is legally binding to provide lenders and must provide with moratoriums and the inability to terminate contracts and all that, with the negotiating part, the new clauses, how the moratoriums will apply, how I will concede this being a legal obligation, but I need to get something back in terms of information, of new covenants, all that. We see, of course, also in terms of and that's maybe more for borrowers at first sight, is the governance issues, the fiduciary duties that managers have. How do I have a business continuity model that is efficient in this case of COVID? But it's also important for lenders, because lenders are stakeholders, important stakeholders in the companies, and so they should also be aware that they need to contribute to have the directors being able to comply with their fiduciary duties. They should not be an excuse for that and to avoid business continuity models. And then you have the other side of the equation, trying to be very synthetic about this, which is after COVID and how this will impact. What we're seeing is the negotiation of, for instance, the baskets, the permitted transactions. We have much more flexibility for new lending, for instance. We have also on that front, so to speak, the incremental facilities that were something that 5 years ago were nowhere in contract, and now it's something that is being asked and provided. The ability to go with that, the ability to have almost an exception to ask for the credit lines that are publicly available, of course, within the permitted transactions. And then the covenants are also something that in the future is going to be a challenge, because and for instance, of course, most of all the events and in gov-lit agreements, for instance, gov-lit agreements are very important, because it's very intuitive. The EBITDA that you had and that is divided in 2019, is that something that is relevant for calculations of ratios in 2021, and not even 2020, in 2021? How will that apply? Are you going to see, and we see this being asked, instead of EBITDA tout court, you have EBITDA with the COVID adjustment, which is crazy, because I think, I don't know, I'm not an accountant, but I think it's very difficult to account for the impact of COVID in your EBIT. How do you do that? Or you use, and also with adjustments, EBIT of 2019, you just skip a year, or you make an annuity that is different. And so we see a whole bunch, so to say, of different ways to calculate ratios important for covenants, that I think that no one has a definite solution for all, but it's being discussed and it's being implemented even now in waivers that go forward into 2021 and beyond. And so we see liquidity tests very important now and in the future, because as we're saying, we don't know how long this will take. And liquidity is blood, right? So if there's no liquidity, so we see a major concern right now with liquidity tests, and that's the basis for discussing everything else. And I mean, there are we see other solutions, for instance, debt buybacks as a means to have borrowers having more strength going forward. We see a whole bunch of solutions that are being implemented, and basically saying, let's adjust as far as we can, which is difficult because we don't know where this will end, and also give flexibility. I think maybe these go hand in hand, but that's what we see, both in terms of what is happening now and how we can skip some obligations as borrowers, and also how we can protect ourselves going forward as lenders. And I mean, I don't know if I hope that I would not use all the time with this legal question, but just one other point which I think is important, so that what we see, I think I said this already somewhere else, is what we see, and I hope that we keep seeing, because it's very, very productive, is that parties know that they are on the same boat. After all, right? Lenders are in the same boat as the companies if the company doesn't pay, it gets to them. And that there is a very positive attitude going forward, that lenders ask information and borrowers are willing to provide information. Information is key. And that with that attitude that we are seeing actually in the market, things will hopefully go for better, not for the best, but for better.
Great, thank you, Gonçalo. And well, we've discussed earlier that well, the banking industry is moving faster than in the last crisis. But from your point of view, who is the best placed to implement or to agree forbearance measures with the borrowers in this situation? Do you see that there is any kind of difference between the banks and the alternative lenders in that sense? Are they moving faster in any sense, or are they more flexible in some part of the financings or in some part of the deals compared to each other?
Was that for me?
Yeah, for instance.
Well, I think, I mean, just to keep it short, I think yes, but they are paid differently. So new lenders are it's different. I mean, I think that their approach is very different. I think that they can cooperate, and we have seen transactions where banks and funds have cooperated successfully, but I think that their approach is different. But I mean, I'm not no expert here on that, so maybe someone will disagree.
Maybe Pablo and Nunzio have something to say about that.
Nunzio, go ahead.
Yeah, probably the approach of alternative lenders, and so real estate debt fund is a little bit different in terms of capacity to lend money, because obviously, as we know, the lenders have many passages, especially in this particular period, and the debt fund are more agile, considering that they are quite new in this market and in this landscape. So, in my opinion, the debt funds and alternative lender are a little bit faster respect to the traditional lender, especially in this period. But obviously, there are some transactions that are particularly difficult to analyze where they can cooperate. But overall, in my opinion, alternative lender are a little bit faster than traditional lender.
Yeah, and maybe to add, what I have seen is in some syndicates is that even though most of us are European lenders, we are from different countries, and we have some little differences in local regulations, and therefore our strategies towards forbearance and and providing flexibility on repayments and covenants and all of these are different. So sometimes the strategies are not easy to align. So whenever, obviously, if there are bilateral deals, is easier. But in terms of syndicates, even though you would think that two banks from the same region or even from the same country would have the same approach, it's not the case. At the end of the day, we all need to go to our committees, and the strategies are not exactly the same.
Mm-hmm. Great, thank you. Well, and maybe just to close the panel, well, I left the hardest one to close the discussion, and it's open to all of you guys. Do you think that there's going to be any structural market change that will stay with us after this crisis in terms of financing? Let's start with maybe with Pablo.
Well, I mean, there are some points that we have already covered, and I believe that the alternative lenders, at least in Southern Europe, will be more relevant in the future, and that would be good, in my point of view. For example, for financing the development deals, which is something positive. And I believe that will be quite good. In terms of loan-to-value, covenants, and let's say having a more complete documentation on all of this, I believe we did most of our homework in the previous crisis, so I believe that's going to remain very similar.
Mm-hmm.
From my part, I think there are some things that are going to be developed this time. I think it's high time the rental market in Spain gets a big push, and I think maybe this time it's the time, as we are going to see financing even through the toughest time of the crisis, and maybe all the rental market and all the rental culture, let's say, that has never been present in Spain. This will be something that we will see changed because of all these BTR projects, and just plain investors interested in really developing an industry in a professional way, in a way that really can make this part of the residential industry really develop. And I think that's a change that we're going to see after this crisis.
Fully agree. That's a very good one.
Another point, in my opinion, is that before COVID, we used to see many light covenants financing agreements, so with no ICR or loan to value threshold very, very high. So probably after this crisis, we do not see any light covenants financing agreements. So the lenders in general, traditional lenders, but also alternative lenders, will be more cautious about the covenant.
Great. And Gonçalo, anything you would like to add?
I think all I said, I just to say that I agree actually both with what Pablo and Nunzio said about the work from the previous crisis has already been done, so we know how to. I mean, what the agreement should include to be safe. Just to say that. But I also agree with Nunzio saying that due to the fact of all these uncertainty in terms of the information and the prospects, I think we'll see more detailed and fine-tuned elements in the covenants, and that can result in less COVID-light agreements and more detailed. So I think actually that's perfect for lawyers because we'll have more work, and that's also very relevant for I think the transaction, because it will be a good transaction based on the information that we have from the GFC and what we have been doing to improve, and also this fine tuning in terms of very detailed information that we ask, and I think it will make better transactions. At least in theory, it should.
Great. Well, I think it's time to close the discussion. Thank you very much to all of you. At least I've learned a lot in this hour. So again, thank you all, and please stay safe. And I think that we will win this hard wall that we have with us. Thank you all.
Thank you, everyone.
Thank you. Bye.
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 Bye.